So now what I want to do is talk about, once you put on the trade, how you can take off the trade using TastyTrade and using Thinkorswim. Okay? And so if you're on TastyTrade, it's two ways you can take off a trade. You can go in, and I'll show you this here. You can go into it, and I just say you only wanted to take off these puts here. Okay? Well, you can go and highlight it, and you can right mouse button click. Highlight only the legs you want to take off. Right mouse button click. And in this scenario, it's giving you a closed position, and then it's saying balance, default, or full. Right? Sometimes full is going to be different than balance, okay? Because you might have some offsetting type of contracts. So for example purposes, if I highlighted these here, and then I went closed position, you can see balance is different than full this time. Full is indicating 2 on the put side and 1 on the call side. But balance is basically saying, okay, you're trying to take it off in a balanced way. Right? So 1 and 1. Okay? And default is always going to be 1 and 1. It's always going to just be one contract. That's the default quantity on TastyTrade. Okay? So if I go back now, and let's say I'm going to take this off, and I decide that I'm going to do the balance. Well, you can see here that it's going to take you to this screen, and this is how much you're going to be buying it back for. Okay? Then you can hit review, and then you send. Okay? You hit review, and then you send. Another way you can do it is go actually into the option chain. Find that trade. In this case, it's 9 days to go. I find that trade. I'm just going to do the put side, and then I do the opposite. So right here, if I sold something, I'm going to buy it. So I sold this one, so I need to be right here. I need to buy it, do the opposite. So I'm buying it here. I purchased this one, so I need to be right here to sell it. And then I need to make sure I'm doing 2 contracts, because this is 2 contracts. Okay? So I just do the quantity on TastyTrade here, and then I hit the quantity, and then it's the same thing, that 160 that you noticed, right? It's the same way, 2 ways to do it. Okay? And then you hit review, then you look at it, and you send it, right? That's how you would take this off. If you were trying to get filled, then you have to adjust the price. So for example purposes, I just say, you see I got these things that's working here. Well, I'm going to right mouse click on the working. I'm just going to do it on this one for example purposes. Right mouse click on it, and right mouse button click on it, and then I hit replace order. Then I can change the price, and let's say I needed to increase the price, and I hit this arrow. If I needed to lower the price, I hit this arrow. In case we're not going to do anything, I'm just giving you an example. Okay, so that's how you would do it on TastyTrade for taking off a trade. We'll go over the stop loss here in a second, but let's go over to Thinkorswim, and let's talk about taking off a trade. And I want you to understand that the founders of TastyTrade were the founders of Thinkorswim. TD Ameritrade bought Thinkorswim from the founders of TastyTrade. Okay? So a lot of the functionality is going to be very similar. TastyTrade's platform is just more modern. It's more contemporary. The Thinkorswim platform it has a lot more bells and whistles, but it's a more antiquated drop-down type of menu platform. And TastyTrade is point and click and drag and so forth, like you were on your phone kind of thing, which is really sweet in my opinion. All the other platforms that I've noticed out there are in that antiquated mode, like Thinkorswim. So TastyTrade, in my opinion, is on another level at this point. Maybe the other ones eventually get there, but TastyTrade with this function, the ease of use and what they show and how fast it moves is on another level at this point. But if I was taking off something, it is the same process. So let's just say I was going to take off something in this Walmart trade here on this call side. Well, I'm going to highlight it, right? I'm going to highlight it, and then I'm just going to do this one contract here. I'm going to right mouse button click, and on Thinkorswim it says create closing order, and almost 100% of the time it's going to be the first option. You might have a bunch of other options right here, but almost 100% of the time it's going to be first option. So if I click here and hit buy, it's going to take me to the order to close here. I can get this pop up. There we go. So it's going to take me to this order to close. And just like you saw on TastyTrade, this is the part here that you can see and you can adjust to whatever the case may be. Right? So it's saying we're buying this back. We're buying it back for $3.25, and we are doing a day order. And if we wanted to, we can do the same on TastyTrade. I didn't show this. You can change it to good to cancel and so forth, but I will explain that a little bit more when we go over to the stop limit. So this is buying back that option that we sold. So then you hit confirm, and then you're able to get out of the trade by hitting send here. Okay? And then if you wanted to do it the second way, it's the same thing. You go over here and you find that trade. I'm going to this 9 days here. I'm finding it. You can see this is in the money because we did a deep in the money cover call on this. So what we would do here, if we were going to buy this back, we were going to do the opposite. So this is saying it's a -1. So that means we sold it. This is red. So that's telling us we sold it. Right? So so if if I sold something to close it out, I have to buy it. So when you click on the ask, that's when you're buying something, because I'm going to click on this ask column here. This is the ask column, and it's on both sides, as you can see. So we're on the call side here. So what I would do is just click here, and I'm buying that back. And you can see it's the same as it was when we went through the monitor tab there and we did the right mouse button click to get the closing order. So same thing here. You just hit confirm, and then you can send. And then if you have to adjust the price, then you adjust the price. Okay? All right. So on the TastyTrade platform, you can put in a percentage to close. And so, for example, going back to that same thing we were looking at, I highlighted what I want to close out, right mouse button click, and then it says close position, then it says close at a percent profit. So let's just say you wanted to close at 50%, or it's saying 50% right here already. Or if you wanted to close at 70%, you move it up to 70%. And then you hit the balance or the default or the full, depending on how you want to take it off. So in this case, I'm going to hit balance. And then you can see it's locked down here for this is the price we're going to try to get out of it at. Okay? And so based on the percentage, you want to make sure that that is the correct price when you're buying something back. Sometimes this you might get a bad read. It's rare, but you might get a bad read. So anyway, I'm going to go over here once again, and I'm going to put profit. I'm going to go, in this case, we're going to go with 50% profit, and you can see that that's less than what it's currently trading at right now. I mean, it's trading at 155, so we were basically at 70%. If we wanted to get it, we're trying to get a little bit less, a little bit more than that. You just put it in that way. On Thinkorswim, you're going to have to do it manually to be able to understand what you want to do. So on Thinkorswim, you have this column here that we have you set up as percentage wise, and you'll be able to see if you only have like one trade on or something like that, you'll be able to see what your percent is of up or down on the trade. But most of the time, you're going to have to manually kind of indicate that on if you want to just put in a good to cancel. Going back to this once again, you can. I'm going to just show a different one here. On this one, it's because it's only one contract, and we're taking off this here. It says close position. You can close the position. It's just regular close. You don't have to worry about default and all of that, because it's only one contract here. So it's going to give you this close position. You have close profit still, and use these arrows to change. If you wanted to get out at 35%, or if you wanted to get out at 50%, if you wanted to get out at 85%, you can put all those things in, and then you just hit this arrow, and it's going to take you to where you want to be, right? So you can see at that 80%, it would be $40, 40 cents, and then but it's currently trading at 80 cents, right? If you're on TastyTrade, you're going to put in if you wanted to kind of stay good until it's canceled or filled, then you have to change this to good to cancel. If you're using options on futures, if you're using options on stock, it's going to automatically make it a good to cancel order. Okay. Let's go back to this 51 days. And if I bought this for example purposes, and let's say this is the trade we had on, we were going to get out of it. And I wanted to put a stop limit. On TastyTrade, you'll act like you're buying the trade back. And then you would go into here where it says order type, and you put stop limit. Okay? And then the first price here, the first option here is the trigger price. That's the stop price. That's when when it gets to a certain point, this number, whatever number you put here, that's when you say, get me out, right? You're screaming, I want out, I want out. It sends it to the market, and then it's an open order, right? It's an open order, and then the limit is basically saying, okay, I don't want to pay more than X because I don't want to have a market order. Right? I don't want to pay more than X. So I just say your limit, your trigger was $5, and then you say, okay, well my limit is $5.50. All right. So once it's trading at $5, you want to get out, but you don't want to pay more than $5.50. So why would you do an order like this? Well, if the market is moving a lot, if you did a market order, you can get filled at some ridiculous price perhaps. When you do a stop limit, then you know that hopefully, not that it's 100% of the time, but this is close to that you will pay no more than $5.50. Okay? Sometimes things can be so volatile that it shoots past your $5.50 in this example, and you won't be out of the trade. And if it keeps going against you, then that's how you can have a bigger loss if you're not aware of what's happened. Okay? So I know with Dr. Meadows, he says this has happened to him a couple of times, that it shot through his stop, but it always came back, and he was able to get out at the stop price that he was looking for. But he does understand it's some risk that it never came. And it never comes back, and you have a bigger loss. So that's why it's important to have backup systems. So for me, if I'm putting a stop loss, I'm also going to put some type of an alert, and then that way if the stop loss doesn't work, I'm aware that things could be going bad. So I'm watching, or I'm looking at it on my phone, or I'm checking on my phone. So I don't want, end up having some, big loss. Right? It's always important to avoid losses. So once again, on Tasty Trade, the trigger price is the first number, and then the limit price, the amount you do not want to pay more than, is the second price. Okay? So if you're selling something and then you're putting a stop limit, then the trigger price is going to be something that's higher, and the limit is going to be a little higher than that. If it was the opposite, let's say you bought something and you were trying to get out, then it's going to be lower. So it's going to be something like this: $4. Let's say you paid, $8 and you want to get out if it's down to $4, and then you don't want to pay less than, 350 or something like that. Right? It's the opposite. It's a little more tricky for people who are selling options a lot. It's a little more tricky, but just think about what you're trying to accomplish, and then it'll make a little bit more sense. Okay? So that is the stop limit on Tasty Trade. If we go over to Thinkorswim, you can do a little bit more um, advanced stop orders, like I believe it was Jim was talking about. You can do a one cancels order, and I'll show you that here in a second. But let me show you how I can do this one here. Let's just say that we're trying to get out of this one. We sold it, and we're trying to have a stop limit on it. So what I can do is go over here and put a stop limit. And you can do this on a spread. I'm showing you on an individual leg here in this example. Still the same thing. I'll show you the spread here in a second. So on Thinkorswim, the first number is the limit number. The second number is the stop. That's the trigger. So in this case, if I was trying to buy something back, because let's say I originally received $100 and I didn't want to lose more than, let's say, $4. So I would put this in at 350, and then I would put the limit at $4. It's the opposite on Thinkorswim. Okay? The limit's the top number, the trigger is the bottom number. Okay? That's the trigger where it says STP, and then it says limit up there. That's the limit price. So what this is saying is that once it's trading at 350, it's going to trigger it, it's going to go to the market, and then I'm going to try to get out, but I do not want to get out more than $4. Okay? And this is the order type. You just go under order type to do this. You can hit here and you can see you got stop limit, you got trailing stop. So Thinkorswim has more options here for you to be able to, execute certain things. Okay? Now, if I wanted to do a spread, like I was showing on Tasty Trade there, I just go here and I just act like we are putting on a spread. So I'm going to click here, and then I'm going to hold down Control, and I'm going to click here to make a spread. So in this example, I would go here and once again just hit stop limit, and then I would the bottom number is the trigger price, and then this top number would be the limit, how much the most I want to pay. Okay? So then if I wanted to put in a stop limit and a profit target, then what I would do on Thinkorswim is go over here where it says advanced orders, and I would choose OCO. That means one cancels the other. Then I would find some green space here on this, and right mouse button click and hit create duplicate order. So now I got two orders up here. And then I'm going to go over here and say I'm going to put, instead of day orders, I'm going to put good to cancel orders. I'm going to change this to good to cancel orders in this column here. And then I'm going to go over here and I'm going to make this first one I'm going to change this to just to limit. But this first one's going to be my stop limit. And so let's just say I originally received $100 and I don't want to lose more than $300. So I just say I put in trigger at 290 and my limit is going to be $3, just for example purposes. Okay. Then let's say I received $100 and I want to buy it back for 75%. So right, what I would do is put in 25 cents here. So then now I can place an order that one cancels the other. If my stop limit gets hit, this one here, then it's going to cancel this. Okay. Or if my profit one, the one that I'm trying to, if I get the 75% profit that I want, then it's going to cancel the stop limit. That's what it means by one cancels the other. Right. And on Thinkorswim, it's going to put this like link in the working order area so you can know that these two orders are linked to each other. And I'll show you what I mean by that here. So if I go over here and I just say we put this in here, I'm just going to do it on one contract here. So far on this we're up 133 on the call side. And so what I'm going to do is put in an order to a stop limit order, or excuse me, a profit and stop limit. Right? So this is hit here, and I'm going to put a stop limit on this first one. And then, so the stop is that if it's trading, I just say I want to stop if it's trading at just to make this not get hit, put this at trading at $7, and then let's just put the limit at 750, and then let's put in our profit target. So our profit target, I'm going to put this in. We're going to buy it back if it's trading at 25, or let's just say 10 cents here. Okay. And then, so this is two separate orders like I just demonstrated. One is a stop limit order, one is the profit order. And they're going to be linked here in a second. So I'm going to go here and I'm going to send this, and we're going to go over here and you're going to see that it's linked now. Okay. It's linked there. So once again, if one gets filled, the other one's going to get canceled. Okay. Because they're linked together. One cancels the other. And Thinkorswim allows you to do that. TastyTrade allows you to do it on individual legs, but not on spreads yet, or unless they fix that. The last time I checked, that you couldn't do it on spreads. Okay, but you can do what
Hey,
they.
O'Brien, I emailed them
Yes.
and asked. They said supposedly 4 to 6 weeks you should be able to do that on Tasty, but we'll see if it actually comes through.
Yeah, we'll see if that's true. But they have made some changes recently, right? So for example, before you couldn't do stop limits on spreads, period, on Tasty Trade. But they recently upgraded it, so you can do stop limits on spreads on stock options. So that helps, right? So if you're doing a day trade or one DT or some short trade, or if you have to walk away from your desk for some particular reason, your phone, it's good to be able to put your stop limits in and things like that. And so now we're going to talk about how to set those stop limits and profit targets and so forth. So I'm going to base this on if you are the seller, because we are primary option sellers. So let's say you originally receive $100 for selling a spread or a naked call, a naked put, whatever, but you received $100. And let's say you want to get 75% of that. So if that's the case, as an option seller, winning 75% means buying it back for $25. Okay? It's buying it back for $25. So in that case, you would set your target, your profit target, to buy this back if it's trading at $25. Okay? But let's also say you wanted to put in a stop limit. And let's just say we did a typical 3 times the credit we received. So if we received $100, 3 times that would be $300, right? So we would put a stop limit for $300. But how do you put that stop limit? Do you put it at $300? Do you put it at something different? So what you want to do is you're going to have your trigger price. I'm just going to put a T here, right? You're going to have your trigger price, and then you're going to have your limit price. I'm going to just put an L, okay? And it's an equal sign here. So if your 3 times loss is 300 or 300% here, if that's your loss, then what you're going to do is say, all right, I want to put this in at for example, 275. That's my trigger price at 275. My limit is going to be the $3. So the reason why you would have this 25-cent difference is because the markets are moving up and they're moving down, and you don't want to, if it's moving violently, you don't want it to shoot past your limit and you never get filled, as we were talking about earlier. You give it a little room here so that you can get filled. And so I like, anywhere from 15 to 30 cents, but if it's a volatile market, I would put it in definitely 30 cents, sometimes even 50 cents, because I want to make sure I get filled.